everybody, this is Lara from Pure Elliott Wave. I'm going to be updating Euro for you this week as Jordan Marshall is taking a break, and I want to remind you that we're going to be doing Euro 5 times a week, Monday to Friday, with a text and charts Monday to Thursday, text and charts and video on Friday, and that'll be coming up on pureelliottwave.com. And when we launch that as a subscription product for the first 48 hours, we'll offer a grandfather rate, and that will never again be repeated. It'll be a really good rate. So if you want to be notified of that offering and take advantage of that grandfather rate, click on the link below and put your name on the list to be emailed of that notification rate. Let's jump into Euro. It moved higher over the last week, which is exactly what we expected for the short term. I'm going to tentatively say it might be done here because it's finding resistance at the upper edge of a channel, but I have another price point if it does continue higher where I expect it to find resistance. The next wave down should be a low degree third wave for Euro. The bigger picture overall for Euro was bullish, and I have different quarterly charts. I'm just going to go over weekly charts and daily charts and hourly this week, but if you click through, I'll put a link in the description box below to this article that's got charts and text for you, and in this article you can click through this link and see the quarterly and monthly charts and Elliott wave and technical analysis. So we are doing a thorough analysis of Euro, but just on a week by week basis. We'll focus on weekly charts. It'd be pretty boring if we did quarterly and monthly charts every week. Our analysis for Euro expects a super cycle degree trend change down here, and to see why and how that fits in the Elliott wave structure, again, you'll have to look at monthly and quarterly charts. And I do have 3 different wave counts at the quarterly chart level. So this is not the only wave count. For the bigger picture, I've got 3. For the short-term picture, they're all going to be expecting upward movement. So it's a pretty good big call to make that Euros have found a sustainable low in October 2022, but there is some technical support for this view. And from a really simple trend perspective, we've got a series of lower lows and a series of lower highs down here, and at this point here, that series of lower lows and lower highs was breached, and we've now got a series of higher highs and higher lows. And so that also supports the view that there may have been a trend change down here, but the analysis calls for a really big trend change. Really, to see that, you'd want to see this major higher high taken out, but that's such a long way away. The Elliott wave analysis sees a huge correction unfolding, and within the correction, here's the end of wave B and the start of wave C. Wave C most likely to subdivide as a zigzag, so its cycle degree, the first wave up is most likely to be a 5-wave structure, and I'll label that primary wave 1 and incomplete. The first 5 upper intermediate degree fits really well and is likely over here, and now that's followed by a correction to the downside, labelled intermediate 2. So 5 steps up, 3 steps back, the most simple Elliott wave pattern. That's the full simple Elliott wave pattern, 5 and 3. This is an impulse, and this is subdividing as a double zigzag. When we use an arithmetic scale and we draw a channel from this high to this high and place a parallel copy on this low, the upper edge beautifully shows where X, as I'm labelling it, found resistance. So that offers just a little bit of support to the view that this little bounces over and the next little wave down should be underway. We have a target now calculated at 2 wave degrees. At 1.01211, minor wave Y will reach 1.618, the length of minor wave W, and at 1.01079, intermediate 2 will reach down to the 0.618 Fibonacci ratio of intermediate 1. So a relatively small, somewhat useful target zone for this downward movement to find support. Intermediate 2 may not move beyond the start of 1 below 0.95364. When intermediate 2 is over, this wave count will expect a 3rd wave up at intermediate degree. That's not here yet, that's a few weeks away. Let's take a look at the daily chart. We're going to zoom in on the structure of intermediate 1 from the low down here. This point down here, from this low to this high, intermediate 1 subdivides as a 5-wave impulse, and we've checked subdivisions at the daily and hourly chart level, and for parts of it also on the 15-minute chart, just to make sure that everything fits. From the end of intermediate 1, the start of intermediate 2, it looks like it's subdividing as a double zigzag, because from this high to this low, this movement fits best as a zigzag and not a 5-wave structure. So I don't want to label this A, B, C, I want to label this W, X, Y. Double zigzags are pretty common corrective structures, especially in a second wave position. The X waves are usually relatively brief and shallow, and we had expected it was over here, particularly after the strong bearish movement, but that was invalidated and X has moved a bit higher. That's okay, there's actually no limit or rule stating where X waves and double zigzags must end or may not go, and so there's no upper invalidation point, unfortunately, for this wave count. I am expecting minor wave Y is most likely going to be a zigzag, because that would mean intermediate 2 would be a double zigzag. Double zigzags should have a strong counter trend slope. Here is the previous trend. The double zigzag should have a strong downward slope. The second zigzag in the double is labelled minor wave Y, and its purpose is to deepen the correction when the first zigzag hasn't moved price deep enough. And as minor W fell short of the 0.382 Fibonacci ratio for a big second wave, especially a large degree, intermediate degree second wave and a new trend, I would expect it to be a lot deeper than that. If the target zone is wrong, it might be a little bit too shallow. Intermediate 2 could be deeper than that, but now we've calculated it 2 wave degrees. I've drawn a channel around intermediate 2 from the start to the end of minor X with a parallel copy on the end of minor W. Initially, I'll look for minor wave Y to find support possibly around the lower edge. We could see a bounce, a breakthrough, a back test of resistance, and then a move down and away, or price just could take its time for minor wave Y and continue to find support around the lower edge. We'll see how price behaves if and when it gets down there. Let's take a look at the hourly chart. This high here of minor X is this point up here. When we're publishing Euro analysis 5 times a week, every day, Monday to Friday, we'll be publishing hourly charts. And whenever possible, it's not part of the paid subscription. Whenever possible, though, in the afternoon before New York closes, I tend to update hourly charts so members can adjust their positions prior to New York closing, as I know a lot of traders don't want to leave positions open for too long. And so this is this kind of analysis that we'll be giving 5 times a week. From this high to this low, this downward movement has a really good fit as a 5-wave impulse. From this low to this high, this upward movement has a pretty good fit as a zigzag. Leading contracting diagonal for subminuet A, minuet B, impulse for subminuet C. When I use Elliott's technique to draw a channel around this correction, from the start of A to the end of B, a copy on the end of A, extend that out, and C has found resistance in the last hour at the upper edge of the channel, I am going to tentatively label it over there, even though it hasn't met the 0.618 Fibonacci ratio of minuet wave 1. Minuet 2 could be over here because of resistance at this trend line, and that's a common place for C waves to end. However, they don't always do that. Sometimes the C wave, because it's in a third position, can have tendencies of third waves and can have the power to break above resistance at this trend line. If price continues upward from here and we see a full hourly candlestick printed above this trend line and not touching it, then the channel would be breached. That's my definition of a trend channel breach. And it needs to be by upward movement, a green hourly candlestick. If that happens, then look for next resistance at the 0.618 Fibonacci ratio at 1.08474. Minuet wave 2 may not move beyond the start of 1 above 1.09296. When minuet 2 is over, then we can use the Fibonacci ratio between 1 and 3 to calculate a short-term target for minuet 3 down. Because I don't have confidence that minuet 3 has begun yet, we can't do that yet. What would give me confidence is a breach of the channel by downward movement. If we see a full hourly candlestick, a red candlestick, below the lower edge of the channel, then I would have confidence that this bounce is over, that the third wave down is underway, and at that point I would then calculate a target for minuet 3 for you. I'm not prepared to do that yet. We might be able to do that in the next day or so if the way I've labelled this chart is correct. Because stock charts don't give volume data, we're going to have to look at the volume analysis on a separate chart, and then we'll go to classic technical analysis, the other indicators I use next. On the weekly chart, at this really important low back in September, October 2022, The downward trend reached extreme, and our money flow reached oversold and then exhibited double bullish divergence. Now we see price moving higher with declining volume overall from this low up to this high. For the very short term though, as price is moving higher in here, there is now some push from volume. But when we look at the daily chart, there's some decline in volume at the end of this last completed upward week. On balance volume is within a technically weak range, it gives no signal, and money flow is neutral. At that low here, RSI also reached oversold and exhibited double bullish divergence, and the downward trend on the weekly time frame reached very extreme. In those circumstances, we see a morning star candlestick reversal pattern. This is 1, 2, 3, these three candlesticks here, and just jumping back to volume, this candlestick here did not have support from volume, but volume declined from the previous downward week, but volume did remain relatively heavy. So it's not as good as we would like to see, but it is a bullish reversal pattern, this morning star, very close to this low. So given those circumstances, I give quite a lot of weight to that candlestick reversal pattern, and it's unsurprising we're getting some reasonable upward movement. How long it's going to go for, the candlestick reversal pattern doesn't say, but given that the downward trend was very extreme, it is reasonably likely that this low is going to be sustained for a reasonable period of time. Our Elliott wave analysis expects it to be sustained probably for some years. It's a huge trend change we're calling for. Remains to be seen if that's correct. For the shorter term, there's a shooting star candlestick pattern after an upward trend here. That's a bearish reversal pattern. It's been followed by some downward movement, so that could now be resolved. There is an upward trend now in place at the weekly time frame. ADX is rising, but it's not the strongest bullish signal it can give. That's when it comes up from low levels below both DX lines. It hasn't been long enough after this very extreme downward trend yet to bring the black ADX line down to below both DX lines. For the short term, price is moving a little bit higher. Let's just pop back and see. The last completed upward week, higher high, higher low, did not have push from volume compared to the previous week, but for 3 weeks in a row here, we did see some push from volume. So the volume profile for the very short term on the weekly chart is bullish. RSI is not overbought and ADX isn't extreme. This new upward trend has a very long way to go before it gets extreme. Stochastics neutral, ATR overall declining as price rises. This could be a feature of euro in its early stages of a new trend. That's neither bullish nor bearish. On the daily chart, at this high here, there was a bearish candlestick reversal pattern in dark cloud cover and some bearish divergence between price and money flow. Price then falls, overall volume essentially flat, starting to rise here with some upward movement here, but now for this last piece of upward movement here, volume is now declining. So for this very short term, the volume profile is now bearish, and that supports the short term Elliott wave count, which expects that bounce is likely over. On balance, volume broke above weak resistance, tested support, moving up and away. Weak bullish signal. This trend line doesn't hold great technical significance, which is why I judge the signal to be weak. And money flow is neutral. There's a shooting star here. It looks a lot clearer on stock charts, and that is a bearish reversal pattern supporting the view that maybe this high is going to be sustained for a little bit longer. It could have been resolved by the following daily candlestick though. Both daily and weekly time frames indicate an upward trend. Neither time frame the trend is extreme, and at neither time frame is RSI overbought, and so there's plenty of room to go before this trend becomes extreme. Look for next resistance if price continues high here at 1.098. Stochastics entering overbought, but when the market's trending, we use RSI and money flow, not stochastics. That's it from me with your once a week update for euro, which is going to continue to be public for quite a little while yet. And again, if you want to be notified of that grandfather rate and get euro analysis from us 5 times a week, click on the link below. Thank you so much for your support.